Hello traders, my morning video. Fear is unhinged once again, rocking the global markets. Uh, Basically, I'm calling out today, and I'll probably be the only person out there doing this, but I think today is going to be peak volatility. As in, as you can see where we closed on Friday, and they don't. This does not reflect the uh, after hours uh, volatility. The VIX doesn't. But so you have to go to the VX futures. They're up 30% in the overnight session on the VX futures. So we're going to be opening up near 80 or better on the VIX this morning, starting the day out potentially, and we are going to be getting a circuit breaker right near the opens of trading as well. So we're probably going to be doing 9-10% down on the markets in the first part of this morning, in my opinion. And I think this is going to finally give us a peak volatility for this panic going on across the country. So just keep that in mind going to today that, shorting volatility at these levels is not necessarily a bad trade. So something to keep on watch going forward, that we might be maxing out on our peak volatility in the near term. So something to keep in mind. And even selling, you know, uh, up here in the 90s, selling credit spreads on VIX and volatility going into Friday would probably not be a horrible idea going forward in your trading sessions. So just keep that in mind in your trading. That's just an idea that I've got floating here. But as you can see, the futures are just absolutely getting rocked. If you, well, wait a minute here. Let's see here. Get this switched around here. They're just completely rocking the crud. You're down over 6% or over 5% on the crude oil. I mean, they're just taking it to the woodshed. They're back to $30 a share. This has acted as a floor for crude in the past. So keep that in mind. You know, the selling pressure in crude could be it might be awfully difficult to be pushing prices even further in today's session on crude. So just keep that in mind. You know, typically if you're going to have a breakdown scenario like this, you want to have a gap below support to open a session instead of trying to push through after such a massive gap down in the markets we're going to see this morning, actually hitting circuit breakers and stuff. So keep that in mind going forward in your trading today. That, I mean, at least crude does, seem to you know, uh, have a floor underneath of it, in my opinion, for today's trading session. Okay, what I'm seeing in this morning session that's really driving things, that's your S&Ps. And that's 60% of your order flow. And what's happening is, look at these spreads overnight. The algos with the headlines and stuff, they're allowing these bid-ask spreads to spread immensely in the overnight session, far further than what they should be. And basically, everybody and their brother is trying to, trade these S&Ps with these wide spreads. And we're getting 1.2, here it is, 6:30 in the morning, already 1.2 million shares on the S&Ps, very heightened volume on the S&Ps. But if you go and look for the breadth as far as support in the actual stocks in the market, you're not getting that, in my opinion. It's all S&Ps driving order flow today, in my opinion. And look at the Qs. The Qs, you've only got 328,000. This is an aberration, in my opinion, going into today's session, suggesting the markets that there could be some significant buying pressure in this market today, in my opinion. So just keep that in mind. You want to see, at least 70% of S&P. You want to see the Qs showing 60-70% of that this time in the morning, and we're just not seeing that. There's a definite divergence going on here in the markets where kind of thinking that the market sellers this morning might actually have this wrong, and this is a dip buying opportunity. So just keep that in mind going in today's session. Very dangerous for the shorts, in my opinion. Okay, the scenario that was going on Friday, which I saw this scenario, so I went ahead and got. I do have a really lotto Amazon put thing or call thing going on from Friday. I took all the profits off there at the close Friday, but we had this massive rally right here into the close Friday. Well, as you can see, versus the trend, we are on the verge of a potential potential trend change Friday. That's why I had to put, you just have to have some long exposure under this situation for a potential gap up and explosive move to the upside, which I had. I thought we were going to get back up here in this volume distribution to open today, and then all the news flow came out and we crashed back down. So, I still think this area up here where we closed Friday is a major supporting area for these markets. And the fact that the VIX is spiking to all-time to new highs on this sell-off today, but we aren't getting new lows on the S&Ps. We have a divergence going on here, okay? And that is a big tell to me that the sellers are getting the selling pressure is getting a little bit exhausted here. So keep that in mind going forward here. Right now, the markets are closed. We are on limit down. So we are going to be gapping down, okay? And, so, but yeah, and we might be putting some lower lows in and stuff. But I'm just keeping an eye on my volume profile right here. I think kind of right about the 2500 level. If we start breaking the 2500 level today, then we're in trouble. But I think this volume profile is telling us that their buyers and sellers are willing to meet at this price range. We're not actually getting any type of bullish action, but it's something to keep on watch going forward here. And we start crossing over this downward trend line, which is getting increasingly closer, which I'm not saying today we're not going to be able to do it, but come tomorrow or late today, we might actually start getting responsive buying, supporting the markets again and getting back above this downtrend line, this midline, start getting potential. So I think we are getting closer to a bouncing process than what the media want people to realize. Similar situation here on the Qs. You had a situation where, you had to have some long exposure in the overnight session just in case you get a surprise to the upside. I forgot to change my midline color. 1 second here. Okay, this is our midline. This is our primary downtrend, and we closed above that Friday, immediately getting rejected this morning, of course, along with the rest of the markets. So, this is actually putting in, this is actually building out a little bit better value here. We do have overlapping monthly value. See these dotted lines? This is where buyers and sellers month on month have come to support prices in the past. So prices down here seem to be much more productive for the Qs versus even the S&Ps. So I do want to point that out. We are trying to build out a base, in my opinion, and we still have that divergence going on here versus the VIX and the VXN. The VXN is the VIX for the NASDAQ, okay? And it's actually marking new highs as well. So keep that in mind going forward. Now here's our problem child today, and mainly regional banks. They have a huge exposure to regional banks. The banks are just completely getting imploded. You go down to zero interest rate policy. That's devastating for regional banks. They've got all this debt on their books, and they just basically at 0%. They cannot put mortgages out there anymore. So, you thought credit was hard to get before. I mean, you're going to have just absolute superb money sent in the bank to even qualify for any type of mortgage under these circumstances. That's the pitfall for 0% interest rates. That no banks are willing to put their money to work because there's no reason to put money into mortgages under this circumstances. So just keep that in mind as a pitfall. We are marking double marking our lows here on the IWM, and you have to go back in time. So I'll try the 10-year here real quick. And boy, this thing has just gotten destroyed. And so let's see here. So we're marking down here. So we are marking way down here. So we are right now. This is 2016. This is value back in 2016. 2016 yearly value that we're marking right at the 2016 yearly value area. So it is looking pretty darn bad for on a monthly basis for the Russell, and plus the energy, they have their energy exposure on top of it. So that's another thing to keep in mind. So we're right here marking prices on this downtrend. So something to keep in mind going forward here. We have completely broken away from our trend. It does make sense now that we are going to be coming down to the 102.93 area. So that's another $5 lower than where we're marking this morning. Russell's looking really bad. We do have the 200-day monthly. It's 104.18. So that would be my next target, 104.18. We're getting awfully close to that. So that's why I'm thinking the bottom isn't quite in yet. We'll probably be seeing that tomorrow or the next day. So keep that in mind going forward here in your trading. The Russell really showing some relative weakness, and this 200 monthly SMA, I really think that's what they're striving for before the buyers actually step up in the Russell and supporting prices. So something to keep on your watch going forward here in your trading. And like I said, we're starting to get awful close to that. You expand it out here, 104. So right here, you see how close we are. That's just one responsive move. That's just one leg down, and we're going to be hitting a 200 SMA on the Russell. So this, to me, represents a strong potential support zone heading into the Russell today. So keep that in mind going forward. Okay, what's happening again today on these last few legs down? Very, very light volume on the downside. Where do we get the volume? Yesterday or Friday. The volume was on the upside. I think there's a lot of bulls out there just waiting to pounce in this market. And if you're trying to keep going short this market, I think you're about to get your head ripped off. I mean, I truly believe that. Look how low these volumes are relative to the percentage losses in these markets. Those percentage losses are being driven by the S&Ps. It's not necessarily, and then it's being reflected back in the stocks, but I think it's unjustly being reflected into these stocks. So keep in mind what's going on here. I think there's a lot of opportunity setting up for this week in these markets. I'm not saying the low is going to be in on the open, but I'm thinking we're awfully close to it. So that's just my opinion, and I'm sticking to it. And it just, if anything, going to a zero interest rate policy has probably did more damage than it did good in the weekend session, in my opinion. It's completely destroying the banking industry by cutting these interest rates like they are. And like I said, I think it's really damaging the markets more than what they're trying to help doing the zero interest rate policies. Okay. And then if you look at this, the S&Ps, let me reload it here. Carnival continues to be up there as a volume leader, and American Airlines, Gilead. But the banks, what gets me? You got the banks down almost 10% today on the banks, and you only got 70,000 shares on these banks. Something just doesn't add up to me. These volumes are not supporting these price moves at all. I think they are suckering the uneducated traders into the short side just to ultimately take all their money. Their mom and pops are selling into this sell off, not realizing that there is a strong potential bounce in this market setting up here in the not so distant future. And we're right in the height of the news cycle and the fear and the panic. And you know what? You know, just one example. We're talking my local news right here. Who are they interviewing about this crisis? The funeral homes. I mean, if you're trying to sow fear into this thing, why do you bring funeral home people in there trying to talk about how their business is going and stuff in the middle of a crisis? It just pisses me off how this media can stoke fear in the markets just for their ratings. Well, that's a tangent. I'm sorry. One second here. I'll give you my final rundowns here. So Apple's in the news. They're shutting down all stores. I think it's for the next 2 weeks outside of China, and so that's going to be a negative driving force on that, coming right back down to the 240 area today probably. But see, we still have a divergence here. They have a really negative headline, but they're not marking new lows yet. That says something. What's going on here? And you got Apple. That's for one example that I'm seeing this morning. Here's another one. Don't you know it? We got a divergence. The tech is just not selling off as hard as the S&Ps. I think there's people starting to shop for technology at these prices today. So just keep that in mind going forward here. You got AMD semiconductors are, we still have a divergence in AMD. Where are my other ones at? Free market levers. You got Apple. Okay, Occidental. That's an oil company. They went and spent a fortune for Anadarko they bought out, and now their total company value is worth less than what they paid for Anadarko. This company is going the way of Whiting. It's probably going to go bankrupt. So that's another one. You couldn't get me to touch it with a 10-foot pole. But like I said, you do have Bank of America at one of the tops. But we do have. Okay, this is what worries me. I think what happened by going to 0% interest rate policies, they did more damage than they did good. I don't think you would have had near the sell-off in the banking industry if they hadn't went to 0% interest rate. So now with the 0% interest rate, that completely and totally redefines how we look at the markets. So we're probably going to be breaking to new lows on the open here on the banks, and that's why I don't want to buy the dip yet. But hopefully in the next couple of days we're going to see a significant bottom in these markets. So it's all about banks today. Are they going to hold the bid here, which I can't see any reason going under 0% interest rate that they can hold the bids, but they are down significantly here. So hopefully somebody will come in here and support these prices on these banks, because that's what's going to really define what's going to happen in these markets. Okay, what else is in the news today? We got LVS at these levels. Las Vegas Sands, we're right down here near the lows. We do have a buy with a $63 price target out this morning. That's significantly higher, so something to keep on watch. Upgrade. Caterpillar got themselves a really nice upgrade today. It's at $90 right now. They have a 137 price target for Caterpillar. That is an amazing price differential for Caterpillar. So something to keep on watch in today's session on Caterpillar. Hess, which is an energy company, it got an upgrade to $50. So keep that one on watch. It's rare to see an upgrade in the energy patch. So something might be happening there on Hess. If you go out in time on a yearly, $50 puts you right back up here inside the gap. So, somebody seems to think this gap is completely unjustified for Hess going forward here. And then also on the upgrade front, we had earnings out Friday. They supported price on Broadcom. They didn't really rally it or anything, but it had to have a bid under it, and it is selling off this morning. But they do have a price target of $330 a share for Broadcom. So something to keep on watch. This could be a player in today's session on any type of bid in the market. Edwards Life Sciences as a biotech, if I remember right, they do have a bid 201. So that is a nice little upside potential on that one. And we have Amgen also, a healthcare provider, and they do have a bid under that one to buy. They didn't actually put a price target on it, but they have a buy rating on Amgen going forward here. But with all the zero copays, I'd be a little concerned about anything in the healthcare industry with this whole testing for the coronavirus thing. It's going to probably have a negative impact on their quarterly earnings. Okay. And then on the downgrade side, like I said, Oxy was downgraded to $10, and that's probably been nice. Okay, so going forward in today's session, some of the things that are happening. Okay, if you like the video, like it. But basically going into the open, I expect a little bit more down pressure. But I am looking really soon here to find a setup, a buy scenario for some swing situations. I have not been taking swing situations to speak of any size in this whole turmoil, but I'm getting increasingly closer to starting larger swing positions to the long side this week. So keep that in mind going forward here. Like I said, like the video if you like it. Please leave comments if you see some stuff I don't see. And like I said, I think we're a lot closer to a bottom in this market than anybody in the media or anybody truly realizes. I think we are actually at that peak panic stage in the next couple of days, possibly today. Thanks a lot.